Today, we're jumping into a classic investment showdown. It's a head-to-head performance battle between two of the world's biggest stock indices. But who's the real winner here? Well, the answer might just surprise you.
So let's just cut right to the chase. If you put India's economic engine up against the global leader in tech stocks, which one actually gives you better returns? You might think you know the answer, but as we're about to see, it is not that simple.
So let's meet our contenders. On one side, you've got the Nifty 50, which represents the biggest and most powerful companies in the Indian economy. And on the other side, the NASDAQ, home to the world's most famous and innovative tech companies. Two very different beasts, so how do they actually stack up against each other?
Okay, let's start by looking at the short game. We'll call this the one-year sprint, a quick race to see who's got the most recent momentum. And wow, right out of the gate, it's not even a competition. Over the last year, it hasn't been close at all. We're looking at a huge performance gap, with one index just leaving the other in the dust.
The NASDAQ? It posted a crazy 25% gain. This was fueled by a massive comeback in the tech sector after a pretty rough 2022. All those big names just roared back to life. Meanwhile, the Nifty 50 was, well, it was basically flat over that same time.
So if we're only looking at the last 12 months, the winner is crystal clear. NASDAQ takes the gold, no question. End of story, right? Well, not so fast. That's just the first lap. Let's see what happens when we zoom out.
Now, let's stretch our view out to 3 years. And this, my friends, is where the story starts to get really, really interesting.
And just like that, the entire narrative flips. Suddenly, that massive lead the NASDAQ had, it's gone, vanished. The two are now running practically neck and neck.
Believe it or not, both indices have delivered a compound annual growth rate, or CAGR, of right around 12%. All that really means is that on average, they've been growing at almost the exact same pace over the last 3 years. The race has completely tightened up.
So what looked like a simple blowout is now anything but. NASDAQ's short-term dominance completely disappears when we look at a medium-term horizon. It's pretty much a draw. That really changes the perspective, doesn't it? All right, time for the main event, the 5-year marathon. This isn't about a quick burst of speed. This is the true test of consistency and endurance. And here it is, our final plot twist. Just look at this. The winner flips entirely. Over 5 years, India's Nifty 50 has actually pulled ahead of the US tech index. And we're not talking by a small margin either.
The Nifty 50 clocked in a seriously impressive compound annual growth rate of about 18%. This really reflects the bigger story of India's consistent economic growth. It's even managed to outperform the NASDAQ's still impressive 14 to 15% over that same period.
So when we look at the full 5-year marathon, it's the Nifty 50 that crosses the finish line first. A completely different result than what that 1-year sprint told us.
Okay, let's take a breath. We've seen a short-term blowout, a medium-term tie, and a long-term upset. So what in the world does this all mean? Let's put it all together. This table just lays out the whole story perfectly, doesn't it? You can see NASDAQ's 1-year dominance, the 3-year dead heat, and the Nifty 50's 5-year victory all in one place. Seeing it side by side really drives home how much perspective can change everything. And that brings us to the single most important lesson from all of this. There's no simple answer to which index is better. The right answer is, it completely, 100% depends on the time frame you're looking at.
Now, before we finish, we have to talk about the fine print. A few crucial real-world caveats. First, for anyone investing from another country, these numbers don't include currency swings, which can have a huge impact. Second, taxes can also really change your final returns. And finally, it's just worth remembering that markets like the NASDAQ can often be a bit more of a roller coaster, higher volatility.
So we'll leave you with this question to think about. When you evaluate performance, or you make your own decisions, is your focus on the short-term sprint, or are you preparing for the long-term marathon? Because as we've just seen today, the winner's circle looks completely different depending on which race you're watching.